Welcome back to the deep dive. Today we have what I'd call an intense synthesis mission. We've got this huge stack of data in front of us.
hmm
It's the residential real estate reports for November 2025, and it covers six, absolutely critical jurisdictions in the Washington, D.C. metro area.
That's right. And, when you're looking at regional real estate, you can't just listen to the headlines. You really have to dig into the local dynamics.
Exactly.
So we're taking the official Bright MLS Data All Residential stats for Fairfax, Loudoun, Prince William, Montgomery, Charles County, and D.C. proper.
And our goal here is pretty simple, really. We want to stop looking at these as six separate reports and just treat them as one big, comprehensive regional market. We're
Right.
trying to pull out some quick comparative insights on, price, speed, and inventory. Basically figure out which areas were most expensive, which were fastest, and where the competition was really the fiercest heading into December 2025.
This is really the definitive map of the DMV for the end of the year. And because the data is all from the same time period, we can finally make those, crucial apples-to-apples comparisons.
Okay, let's jump right to the deepest end of the pool then, the money. If we line up all six of these markets just purely on their median sold price for November, what does that financial hierarchy actually look like?
Well, the price landscape is still, it's heavily dominated by Northern Virginia. No surprise there.
Right.
Fairfax County, Virginia officially took the most expensive spot. Their median sold price was $739,999.
So basically $740,000.
Exactly. And Loudoun County, Virginia was, it was literally just dollars behind them, sitting at a median of $735,000.
Wow.
So that's your top tier right there. Two major suburban powerhouses, both operating firmly in that, high $700,000 range.
So as we move down from that premium price point, where do D.C. and the Maryland suburbs fit in?
So the District of Columbia, D.C. proper, that comes in third, with a median sold price of $715,000.
Okay, so still very high.
Oh, absolutely. We still have three jurisdictions at or above that $700,000 median mark.
Right.
But then we see the first really significant step down when we get to the Maryland side. Montgomery County recorded a median sold price of $635,000.
That's a drop of about $80,000 from the D.C. median. That's a pretty substantial shift in affordability for buyers.
It is.
So if you're a buyer looking for the most accessible price points in this whole data stack, where do you need to look?
Then we're looking further out in the metro area. Prince William County, Virginia offers that next tier down at a median of $557,500.
Yeah.
But the clear financial outlier, the market that offers the biggest financial break for buyers in this entire six-area comparison is Charles County, Maryland. Its median sold price was just $433,390.
That is just a staggering contrast from nearly $740 in Fairfax all the way down to $433 in Charles County.
Yeah.
That spread just highlights how massive the affordability gap is across the DMV.
It really does. And it immediately brings up questions about volume.
Yeah.
Are these super expensive markets actually moving the most homes, or is it the more affordable ones? November's usually a slower month, so units sold is a key metric.
Absolutely. So which of these markets were the busiest in just the sheer number of transactions?
The highest volume markets, they pretty much align with the big population centers. Fairfax County sold the most units. They trafficked 787 closed sales.
Okay.
And Montgomery County, Maryland, was the second busiest with 701 sold units. Those two were, significantly outperforming the sales activity in the others.
In Charles County.
Charles County, again, the outlier, it sold the fewest units at just 201. So a lower price, yes, but also much, much lower transactional volume.
This next data point is, I think, critical if you're a buyer just trying to gauge what the environment really looks like. We have to compare the median sold price to the average sold price, especially in Fairfax.
Right.
The median was that $740,000 number, which is what the typical buyer experienced. But the average sold price, it soared up to $882,580. That is a massive difference.
And that difference, it really speaks volumes about the market stratification there. When the average gets pulled, what is that, $142,000 above the median?
Yeah, about that.
It tells you that a smaller number of very, very high-end luxury sales are happening. Think multi-million-dollar homes. And those sales are skewing the whole market value upward.
So if you're the median buyer, you're competing in a 740 environment, but you're reading headlines based on an 882 average.
Exactly. It's a perception issue.
So Fairfax is really a deeply bifurcated market where the luxury segment is having this huge impact on the overall numbers. How does that compare back to Charles County, our most affordable point?
The contrast just couldn't be sharper. Charles County had that median sold price of $433,000. Its average sold price was $466.
Oh, much closer.
So much closer. It's
Yeah.
only about a $33,000 difference, which shows a far more, uniform, homogeneous market. What you see is pretty much what you get. There's a stability and a consistency in the pricing there, unlike the wild swings we see in Fairfax.
That's a fascinating insight. So we know where the money is, but finding a house is, well, it's kind of pointless if properties are flying off the market in 48 hours.
Mhm.
And that takes us right into the pace of the sale, which is all about median days on market, or DOM.
Speed is the ultimate measure of buyer intensity, and this is where Northern Virginia just solidifies its competitive edge.
Uh-huh.
Fairfax County and Loudoun County were actually tied for the fastest sales in the entire region. They both recorded a median DOM of only 28 days.
28 days, so that's exactly 4 weeks from listing to contract.
Yes.
Wow. To go under contract in under a month. That requires some serious preparedness from buyers. Were the other areas close to that kind of intensity?
They weren't too far behind in that middle tier. Prince William County came in next at 30 DOM, and that was followed by Montgomery County at 33 DOM.
So all 4 of those are still moving really fast.
Extremely quickly, yeah.
Yeah.
It just reinforces how tough it is for buyers across the central DMV suburbs.
But the slowest markets are often the most revealing, right? They show where buyers might actually have some leverage.
Indeed. And the two slowest markets in this whole group were D.C. proper at 49 DOM and Charles County, Maryland, right there with them at 48 DOM.
So almost the same?
Almost identical. The key takeaway here is you're looking at a 21-day time penalty for selling in D.C. or Charles County compared to selling in Northern Virginia.
That's a 3-week difference in patience and, well, negotiation power.
Exactly.
And that difference in pace brings us straight to the underlying cause, competition, which we measure using months supply of inventory, or MSI. And for you listening, just remember, a low MSI means a tighter market. It indicates really intense competition and a lack of choice for buyers.
Yeah. And we find a perfect alignment here between that speed and the supply. The fastest markets have the lowest supply.
Makes sense.
Loudoun County had the absolute tightest market in November, with a rock-bottom MSI of 1.4 months. Fairfax County was neck and neck at 1.5 MSI.
And anything under 3 months is considered a deep seller's market, right?
That's right. So these numbers just confirm that intense pressure that's leading to those 28-day DOM figures.
So where did the pressure start to ease up a little bit?
Well, Prince William County was still very tight at 1.7 MSI, followed by Montgomery County at 2.1 MSI. So, these markets are still competitive, but they are starting to offer just a sliver of breathing room compared to Loudoun and Fairfax.
And Charles County.
Charles County, where we saw that slower DOM, was sitting at 3.5 MSI.
But here is, I think, the most important counterintuitive finding of this entire deep dive, the one we really have to look at closely.
Yeah.
D.C. proper. Washington, D.C. is the third most expensive market at $715,000 median, yet it had the highest supply by a pretty big margin.
A huge margin.
Yeah.
D.C. proper recorded 5.4 MSI at the end of November. And this raises an essential analytical question. How can a market that expensive still have 5.5 months of inventory and the slowest DOM at 49 days?
Right.
I mean, in almost any other metro area, an MSI over 5 would signal a balanced or even a cooling market.
It's the crucial disconnect, isn't it? Fairfax and Loudoun are expensive and they're hyper-competitive. Buyers are accepting the high prices and moving fast because there's just no other choice.
Right.
D.C. is also expensive, but buyers there are exercising choice. They're waiting 49 days and they're benefiting from 5 months of options.
It really suggests that while the D.C. price ceiling is high, the buyer demand pool there might be more sensitive to those prices. Or, maybe the housing stock being offered just isn't meeting buyer expectations as quickly.
So buyers are saying, yes, I'll pay $700,000, but I'm going to take my time and choose, not just jump into a bidding war.
That's a perfect way to put it. It's a high-value market, but it's one with significant buyer leverage compared to the Virginia suburbs.
That structural difference in buyer psychology between the core city and Northern Virginia really is the key takeaway that defines this whole market analysis.
It speaks to different types of housing stock and totally different buyer profiles. I mean, the Northern Virginia suburbs are dealing with a population growth and a migration factor that's just maintaining that fierce competition regardless of the price.
Let's turn to our final major comparison, which deals with market trend velocity, basically inventory accumulation.
Right.
We have the current inventory units as of December 2025, and we can compare that directly to the units from last year, December 2024. Are sellers finally listing their properties in large numbers?
This is maybe the biggest universal story across the entire region. The answer is a resounding yes. Every single one of these 6 markets saw a substantial, measurable increase in raw inventory units year over year.
Give us the hard numbers. What does this supply correction look like?
Okay, let's start with the largest markets. Fairfax County saw an almost doubling of available homes. It jumped from 910 inventory units in December 2024 to 1,714 units in December 2025.
Wow, almost double.
And Montgomery County mirrored that exact same pattern. It surged from 978 units last year to 1,926 units this year.
So in the 2 highest volume suburban markets, the supply side has effectively doubled. Why is this happening now?
Well, we're seeing a combination of factors. First, I think pent-up supply is finally being released. So many sellers were locked into the super low mortgage rates and were hesitant to move.
The golden handcuffs.
The golden handcuffs, exactly. But as the interest rate environment stabilized a bit in the second half of 2025, that hesitation started to fade. And second, I think a lot of sellers probably rushed to list before the end of the year to avoid that typical holiday lull.
Or maybe they're anticipating a slower 2026.
That too.
What about the other counties? Did they follow the same trend?
Absolutely. Prince William County also nearly doubled, rising from 398 units to 799. Loudoun County increased significantly from 425 units in 2024 to 705 in 2025.
A huge jump for them, even if the absolute numbers are lower.
It is. They're just smaller markets. Even Charles County saw a lift, increasing from 465 units to 693.
And D.C. proper.
D.C. already had the highest inventory base last year, but it still added to that supply. It moved from about 2,300 units in December 2024 up to 2,850 in December 2025. So the universal trend is clear. Inventory is accumulating.
Okay, so let's synthesize this. We have this massive inventory surge, but we just talked about how competitive the market is.
Right.
Despite seeing raw inventory double in places like Fairfax, we just established that Loudoun and Fairfax are still operating with extremely low MSI numbers, 1.4 and 1.5. How do we reconcile those 2 opposing forces?
That is the core conflict that is defining the current DMV market. It tells us that demand in those high-intensity Northern Virginia markets is simply too robust to be satisfied by this new influx of supply.
So even with more listings, there are just too many buyers.
Exactly. The moment a new listing hits the market, even with more listings overall, the buyer pool is just deep enough and motivated enough to absorb it almost instantly. The high volume of quick sales is what's preventing that month supply of inventory metric from rising.
Which means that while the overall climate for buyers has improved because, there are literally more houses to look at, the negotiation leverage and that race to the contract pressure in Fairfax and Loudoun, that hasn't meaningfully changed.
That's the definition of sustained, unrelenting demand.
It is.
Precisely. If that year-over-year inventory doubling had happened in a market like D.C. with its already soft 5.4 MSI, we might be calling that a real correction. But because it happened in a market with such intense underlying demand, the pressure points just remain.
Okay, let's bring this deep dive to a close with the essential comparative takeaways for you, our listener. We've synthesized the 6 key jurisdictions in the DMV for November 2025.
And we can really summarize them based on those 3 key axes we explored. So first, if you're looking for the lowest price point and the most, let's say, consistent market in this stack,
It's Charles County.
it's Charles County, Maryland. It stands out clearly at that 433 median mark. It offers buyers lower volume and more time.
And second, if you are tracking market speed and demand intensity, just that sheer competitive edge.
That's Northern Virginia, specifically Fairfax and Loudoun. They continue to just dominate.
They're the most expensive, yet they move the fastest, clocking in at 28 DOM, and that's all driven by those incredibly low MSI figures under 1.5 months.
And third, D.C. proper presents that really unique market scenario. It has a high median price, $715, but it's coupled with high supply and long days on market.
49 DOM and 5.4 MSI.
Right. It's a high-value market where the buyer has significantly more time and negotiation power than almost anywhere else in the core metro area.
So what does this all mean moving into the first quarter of 2026? We established that every single one of these 6 markets saw this universal, substantial increase in inventory compared to last year. Fairfax doubled. Prince William doubled.
And this raises the final and I think most important question for the new year. Given this widespread accumulation of available homes, will the weight of all that supply finally begin to overwhelm the fierce buyer demand in those competitive Northern Virginia areas?
Right. Will we see the days on market start to climb above that 28-day mark in Loudoun and Fairfax as we move into January and February? Or is the demand in those areas just too robust, too deep to be deterred by more choice?
Suggesting the competition will just remain as fierce as ever, forcing buyers to keep moving at breakneck speed.
That fundamental tension between soaring supply and unrelenting demand, that is the dynamic we'll be tracking.
It's going to be a fascinating test case for the start of 2026.
Thanks for joining us for the deep dive. We'll catch you next time.